Hello everyone, hope you all are doing great. I am Rishita. Welcome to episode 2 of Decoding IPOs. Today we are going to talk about the IPO of Ajax Engineering. Ajax Engineering's IPO opened for subscription on February 10th and will remain open till February 12th. The issue is entirely an offer for sale of 2.02 crore shares. And if we talk about the price band, the issue price band is Rs 599 to 629 per share. Talking about Ajax Engineering, it was incorporated in 1992 and it manufactures a wide range of concrete equipment and services across the value chain. If we talk about the objectives of the issue, as I mentioned that it is entirely an offer for sale, the company will not receive any proceeds from the offer and each of the selling shareholders will get their respective amounts. As Ishika mentioned in the last video, that a company that is going public has to issue a prospectus with the SEBI and we can easily access it on the SEBI website under filings. And if you look at the prospectus of Ajax Engineering, here it is. For a retail investor like us, it is not possible or feasible to go through the whole document, which is very long. So we turn to reliable websites and I'm going to use the Chittorgarh website. Let us have a look at the financials of the company. So if we talk about assets, the assets slightly increased from 31st March 2024 to 30th September 2024. The revenue decreased by almost half. The profit after tax also decreased by a significant amount and the net worth and reserves and surplus increased a bit. Coming to the EPS is set to decrease post IPO and the PE ratio is set to increase after the IPO. If we take a look at the GMP, so as of 11th February, the GMP is 2.54%, which is a huge downward trend as it was maintaining 8% to 9% before it was open for subscription. Let us now take a look at the pros and cons of the IPO. So the pros of Ajax Engineering's IPO is that it is open for its employees at a discount, which means that the employees of Ajax Engineering have a higher chance of return. The return is not guaranteed, but there's a higher chance to them. The company enjoys more than 75% actually of the SLCM market and it has almost like a monopoly-like situation. Also, the SBI Funds Management Limited has invested Rs 212 crore in Ajax Engineering through its 2 fund ahead of the IPO opening. Coming to the cons of Ajax Engineering, there are no fresh issues as it is an offer for sale. The company will not receive any proceeds from the offer and also the promoters are actually selling their portions of the company. The GMP, which is an indicator of listing gains of the IPO, fell after the IPO opened for subscription, whereas it is advisable to apply in IPOs whose GMP increases continuously. And the GMP of a main board IPO should at least be 25% to 30%. It is not advisable to apply in an IPO with a decreasing GMP. The EPS post IPO is decreasing and the company is not utilizing its debt capacity as the debt equity ratio is 0.01%, which could imply that the company is not doing their financial management properly. Let me take you back to the debt equity ratio. Here's it, 0.01%. So it could mean that they're not using their opportunities wisely, and which is not a very good sign. This was it for this video. As the GMP has actually decreased after the IP has opened, it is not advisable to apply in the IPO. And that was it from my side. Thank you for joining in. Stay tuned for the next episode.